So over the past 24 hours, I've been getting a bunch of questions regarding President Biden's 44.6% capital gains tax. Where does that come from? Who does that apply to? And why is this something that he's even considering? Well, what I can tell you right now is this is actually President Biden going after former President Donald Trump's tax cuts. He does not want to see those extended. He wants those to expire. But once they do, what I can tell you is that many Americans are going to feel the pain. Now, we have some people that are out there saying that no, this only applies to the top 1, maybe the top 2% of people, even less than that. But here's the thing. This capital gains tax, this potential 44.6% tax is going to affect 100% of people. This is not just going to affect the top 1%, those making over $1 million per year, those with more than $400,000 in investment income. No, it's going to actually impact 100% of the American people. I'll explain why in just a moment. But all I ask is one thing. It takes 2 seconds. Go ahead, hit that like button if you enjoy these daily updates. And now let's begin. So let's talk about it. President Biden's proposal for a 44.6% capital gains tax. Here's the thing you need to understand. The 44.6%, this is going to impact some of the highest income earners. But also keep in mind, this is just a federal tax. On top of this, what you need to understand is that if you live in the state of California and you are a billionaire or a multi-millionaire, you could potentially pay up to 59% of your income in taxes. Yeah, this is a scary situation. Now I want to read a little bit. This is an article from Forbes, but let's go ahead and read some of it. It says, much has been made of President Biden's proposal in the budget of the United States government, fiscal year 2025, to raise capital gains rates. The number being banded about is 44.6%, which would be the highest formal federal capital gains rate since its inception. That rate comes with many caveats and asterisks. Keep in mind, the last time we saw this, I believe, was in like 1922. So over 100 years ago. Let's keep reading. It says the source of the 44.6% rate is a footnote from the general explanations of the administration's fiscal year 2025 revenue proposals. And it reads in relevant part, I quote, a separate proposal would first raise the top ordinary rate to 39.6%. Okay? This is important to note. Now, why? Where is it going to 39.6%? Well, it has to do with former President Donald Trump's tax cuts. Okay, President Biden wants these to expire. That's what's going to happen. Okay, so once these do expire, or if they do expire, my expectation is we will not see these expire, especially if former President Donald Trump regains office. If it's currently President Biden that wins, then yes, we could see this. But here's how this works, okay? Let me show you. It says right here, enacted by former President Donald Trump in 2017, the law drastically overhauled the nation's tax code, including reducing the top individual income tax bracket to 37% from 39.6% and nearly doubling the size of the standard deduction. That is where current President Biden is getting that rate. Okay, let's go back here. It says an additional proposal would increase the net investment income tax rate by 1.2 percentage points above $400,000. Together, again, keep in mind these are together. The proposals would increase the top marginal tax rate on long-term capital gains and qualified dividends to 44.6%. Okay, that's the key. That it's two different parts. And I know I've watched a few videos on TikTok, I've seen a couple here on YouTube as well, where they don't actually go through all the details of this potential hike. Now, here's what you need to keep in mind though. The last time a president proposed such a high tax? Look at this. He says Biden is proposing a 44.6% capital gains tax, the highest ever, previously set by Jimmy Carter. Here's how it worked for Jimmy Carter. Look at that. Okay? So the majority went red. They went for Ronald Reagan. They didn't go for Jimmy Carter. They didn't want to pay additional taxes. Who would? Nobody wants to do that. Right? I'll show you this one again. It says just in, President Biden proposes increasing capital gains tax rates to 44.6%, the highest since 1922. Currently, the highest long-term capital gains tax rate is 20%. He also proposed a 25% tax on unrealized capital gains for wealthy individuals, should this be approved. Here's the crazy part about that. Let's say you have for math's sake, $400,000 house, right? Okay, you have a $400,000 house, and let's say $200,000 of that, because you bought it for, let's say, $200,000. It went up. You have $200,000 of unrealized capital gains. Now you have to pay 25% of that. Okay, so under President Biden's proposal, you would have to pay $50,000 in your unrealized capital gains. But if that is your only asset, right? You bought it for $200,000. It just appreciated. Do you have $50,000 in the bank that you can pay in this tax? Most likely not. And that's where millions of people are going to be screwed. Here's another one I want to show you. I want to read this to you because this right here it just kind of gives you an idea of where we're at. Look at this. It says, fact check. President Biden's 44.6% capital gains tax. It says conservatives are melting down because of a tax proposal within a tax proposal that wouldn't go into effect until 2026 if Congress passed it. But what they are forgetting to tell you is that it will only impact 0.1% to 0.2% of the tax-paying public. That right there is false. This would impact every single person. Okay? Here's the reason why. Let me just show you this really quick. This is what the pre-Trump tax cuts, okay, look like. This was back in 2017. This is exactly what current President Biden wants to go back to. Just eliminate the Trump tax cuts. This is what it looked like. Okay, it was 10% of your income up to $9,527. Today, okay, it's 10% of your income up to $11,600. Do not really don't worry about this number. This number is adjusted for inflation. Okay, so over the last 7 years, this is what they said it's gone up from $9,525 up to $11,600. The key though is you need to look at these numbers: the 25%, the 28%, 33, 35, 39.6. There's a reason I highlighted 25 and 28 because it goes 10, 15, 25, 28. Let's go to today. 10, 12, 25, 28. So this number doesn't change. It's still the lowest tax rate, 10%. This number would increase by 3%. Okay, this goes to 15, this goes to 25, this goes to 28. So the people that make money between $11,600 and technically up to $191,949, you are going to actually be taxed the most. You're going to have an increase in 3 to 4% of your income is going to be additionally taxed. Okay? Keep that in mind. So for those people that are saying that this only impacts the smallest number of people or this guy, and again, not a knock on this guy right here, but right here, this is why I bring this up, is because it says conservatives are once again providing the full context in that the 44.6% tax rate would apply to only those making over $1 million in income per year. That is right. Okay, the top tax rate is only going to apply to those making the most money. But for someone to come out and say, forgetting to tell you that it will only impact 0.1 to 0.2% of the tax-paying public, that is false. Okay? Now, one thing that I can tell you right now is that the reason why we are looking at increasing taxes is because the United States has a massive spending problem. We cannot figure things out. We do not know where to spend, where to stop. And now, here's the thing you need to keep in mind as well. Taxes were invented to pay for war. Well, then when we were not in war, we were still paying taxes. And now the taxes evolved and went to other things. And now they pay for, roads, and they pay for schools, and they pay for Social Security and Medicare and all this other stuff, right? Here's the thing you need to keep in mind. That the problem that we have is you give somebody an inch, they take a mile. Okay? You probably heard that saying before. Well, here's the problem. We have given the United States an inch, and they take a little bit of taxes here and a little bit here, and then they come back and try to increase taxes, and we should increase our tax rate and our percentage, and we should increase the maximum or the maximum tax amount. But the thing is, they just keep coming back for more. Just like the other day, where I told you President Biden signed a $95 billion foreign aid package. It's going to send money to Ukraine and Israel and Taiwan. Well, here's the thing. We're going to continue to do this. They will continue to send money to other countries. One of the reasons why, I was reading just the other day, one of the reasons why they do this is to help us keep inflation down. Because if we kept all of our money here inside the United States, inflation would be soaring. But this is just another example of them trying to explain and sell us on why we should be sending more money overseas. Why we should be doing all this for other countries and not stuff here for ourselves. But I will leave you with that. Let me know. What are your thoughts on this 44.6% capital gains tax? Do you think this is something that should go into effect soon? Or do you think we will be screwed because they're going to tax the millionaires and then they'll keep increasing that tax rate, but they'll drop the income, which means more people, more lower and middle income households will be affected very soon. So let me know your thoughts on this. You can comment down in the comment section below, but that is what we have for you guys today. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.